we're going to demonetize all the physical property in the same way we're going to demonetize the gold. You still need gold to wear. I have a gold ring on. You still need property to live in, but the value of the property should collapse to the utility value and not carry the monetary premium.
Welcome to Dream Richer. Over the years, investors have come to love certain investments over others. With so many different options such as stocks, funds, rates, tips, and so much more. Out of these, property and crypto stand out in today's day and era. Even though having both of these asset classes as part of your portfolio is a wise decision when it comes to diversification. However, if you had to choose between the two, which one would it be? Property or crypto? Today, the billionaire investor who has had both of these asset classes on his portfolio tells the hard truth. Both asset classes have strong positive upside that can be discussed. For example, property is a tangible asset, while Bitcoin is not. Tangible means something you can touch, a physical and very real thing. Investors that strongly support property over crypto will argue that people will always need somewhere to live, which is why property investment is such a strong contender. Just over the past years, the demand for homes in the UK far outstripped the supply to the market. With the UK population growth on a sharp upward trajectory and house building so far behind the requirement, there is no end in sight for this shortage in supply. As such, property in itself stands as a valuable industry. By the end of this video, Saylor unravels this mystery. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
Maybe now we're getting back to the theoretical issue, which is we're going to demonetize all the physical property in the same way we're going to demonetize the gold. You still need gold to wear. I have a gold ring on. You still need property to live in, but the value of the property should collapse to the utility value and not carry the monetary premium. And what you see in this world is that we have monetized metals and we've monetized commodities and we've monetized securities and we have monetized property, especially, right, the definition of investment property. And as Bitcoin grows, Bitcoin is the ideal money. So if I decide I'm going to sell my second or third investment property and buy Bitcoin with it, presumably, the demand for investment properties and the demand for gold, both of those should decrease, right? So as the demand for those decreases, the price will come down. And so that means that if you wish to buy a first home, it will be cheaper for you. The price of the property for its utility value will become less. It'll approach the utility value. On the other hand, it's a lot better idea for a person to buy a Bitcoin and collect yield forever without dealing with the issue of the renter trashed the property and defaulted on the rent and didn't pay you, and then a tsunami hit it and the roof collapsed.
One of the biggest arguments Bitcoin critics will oftentimes raise is that it's not a tangible asset, unlike property. With a limited supply of land, while the demand continues to increase, property is clearly something to own a piece of. Compared to other asset classes, it comes with many other benefits, such as sole management, lower volatility, residual and passive income, and oftentimes guaranteed capital growth. And of course, the greatest benefit of all, tax deduction. Expenses on maintenance, counseling fees, and cost of hiring a managing agent can all be filed for tax deductions at the end of the year. Property value depreciation can also be considered in filing for tax write-offs, which is a big win for many large investors. However, property investment is not all sunshine and rainbows. It comes with many disadvantages that should be considered. These include lower liquidity, high upfront and maintenance costs, possible liability, risk of interest rates hikes, and problematic tenants.
And, if you said, what's the best investment idea 150 years ago, I would have said, how about liquid energy? Liquid energy that, allows you to power the world and power a ship. You ever try rowing a boat across the ocean? Then try sailing a boat across the ocean. And then imagine Rockefeller shows up and says, well, I have this, drum of diesel and you can just put it in and the thing will go 3 times as fast and you don't need sails anymore and you don't have to worry about the wind and you probably won't die. It's like it wouldn't have been a hard sell, right? Like it's pretty miraculous what Standard Oil did. Gold is not digital energy. Gold is not metallic energy, not really. It's a much weaker form because gold is losing 2 to 3% of its energy value every year, and because you can't really develop gold on a big tech network. And control of gold as an asset rests with the gold bankers, right? It's a much weaker thing. And so because it's weaker, there is no gold company, there's no gold miner that could pursue the strategy that we're pursuing. For example, if gold was really money, gold miners would never sell gold. They would mine less gold. They would hoard the gold, and they would borrow money to buy more gold. But you see the opposite with gold miners. Gold miners overmine the gold. They dump gold on the market. They mine so much gold that they pay a huge 30% corporate income tax. Then they still have extra cash. So then they go buy back their debt. They don't borrow money at 2%. They could borrow money at 2%, Peter. Instead, they loan money to banks at 2%. So they're mining gold, tearing up the rainforest to mine the gold, to dump the gold, to drive the price of the gold down, to pay the tax so they can loan money, so they can buy dollars to get a 2% yield. And then when they finish with that, they've still got extra money left. So instead of buying gold with it, they dividend that out to you, the shareholder, and then you pay tax on it. If hypothetically everybody in the world uses Bitcoin, 100% Bitcoin, and every other currency disappears, there's no inflation, then Bitcoin will appreciate in value with the productivity of the civilization, maybe with the differential utility if there's any other asset that people might be using. But if Bitcoin's the only asset and it's the only currency, then it will appreciate in value every year based upon the true productivity growth of the human race, right? It's 4%, 3%. So what you're looking at long-term, it's going to go up 3-4% a year, but that might be 30, 40, 50 years out.
It's clear from Michael Saylor's explanation that Bitcoin wins the debate hands down when it comes to the property versus crypto debate. In one of his famous quotes, this is what Michael Saylor had to say about Bitcoin. Whenever teenage girls and corporate CEO covet the same new technology, something extraordinary is happening. As of yet, Bitcoin has caught the eye of people from all ages, caste, class, and gender. And this adoption will continue to grow. In 2021, the global real estate market reached a value of $6,883 billion and expected to reach $7,806 billion by 2027. In comparison, the total crypto market value was at $2.2 trillion on April 2, which is well off of its all-time peak of $2.9 trillion in early November. Do you agree with Michael Saylor's opinion? To learn more about the latest crypto news, watch these videos here.